All right, we've got just under a minute to go. If you guys are sitting there waiting patiently, feel free to check in the chat so I can know you guys are sitting there waiting. Ian Kramer in the YouTube chat's the first one to check in. How's it going? We've got Mohan. I hope that's how you pronounce it. Mohan in the YouTube chat as well. Let's go. I'd love to see it. Jiggy Snipe. We got Dashio in the Twitch chat. All the usual suspects. Love to see you guys. Appreciate you guys tuning in week after week after week. Dashio saying we need a green week. Good news if we pop over to Thinkorswim. Futures are up over 0.5% right now, which is not too bad for this early on in the week, or this early on in the night rather. But that is the end of the timer. We are going to get into it. Welcome back to our weekly stock market, scan, mainly focus on option selling. We're going to kick this one off the way that we always do. For those of you who are new, we just recap what we did last week. We talk a little bit about what we've got set up for the upcoming week, and then we, if you guys want to throw some stocks in the chat for us to take a look at, we can go through our own scans, come up with new trade ideas. After the recap and we kind of give our spiel about what we have going for the upcoming week, then it's pretty much open to the floor, and we try to do as much as we can to help both us and you guys. So let's jump into it with a quick recap of what we did last week. So we came out with the 1.27% profit, and I got to take a break to say hello to Sierra in the Twitch chat and Jules in the YouTube chat. How's it going, guys? We finished up with a 1.27% return last week. Really solid across the board. The only thing that was kind of dragging a little bit for us was Corsair. That one dropped about 40 cents. We've got a decently sizable position in that, so anytime that stock moves south on us, we're going to see the impact of that. They have earnings coming up this week, so that's going to be pretty much a pretty big make or break moment for this position. We've had it going for a little bit of time. Our break-even price is $30.37. It's slipped below that, but we started playing this thing at 38.5, so it's dropped just under 25% on us, which is a pretty big number to have a stock move against you. But we're still alive. If it could jump back up $1 or $2 as we head into earnings this week, that would be incredibly helpful for our profitability on a week-to-week basis. But we will cross that bridge when we get to it. Zillow is one that we've been going back to the well time and time again when it gets down to this low 100s level. I think that's a really solid play. And they have earnings this upcoming week, and we're going to talk about this one a little bit later on in the stream. UWMC 7.5 strike put. It looks like it closed last Friday at about 763, so above that 7.5 level, and we've seen a lot of strength in UWMC around this mid to low 7 level. And I can pull up the chart really quickly to throw some context behind that statement. If we back it up to the the 20-day chart, you'll see we did drop down below 8, but it's relatively strong around the 750 level, so I'm super happy. Selling puts where that's the max profit level, and further our break-even price is somewhere down in this neighborhood where the red line is. So perfectly comfortable with how that one sets up as we head into August. This expires August 20th, and we've got another longer-term one that's going to expire in December. So just letting those rides sit at the back of our portfolio, and we'll revisit those in a few weeks and hope we could scalp a few $100 off them on a week-to-week basis. Moving further down, our SPX hedge, we've tried to mention that since sometimes we've been getting burned on these, we limit our position when it starts to get close, and last week it did get close, so we closed out some of these for $2.15, closed out 3 of them for 90 cents, and let 2 of them expire worthless. All in all, that was an average closing price of $134. So we lost $290 on those, but again, we had a smaller position that was at a little bit of a later date. This is incorrect here. This is supposed to be, this is what I was thinking of right here. We added a little bit to this position, so we had a nice return to almost cancel this out, and then the further out hedge that we had with XPX made us a decent $550. So all in all, our SPX positions netted out to $460 of profit, despite the fact that the market went up for the first half of the week. As we could see, it finished down. It was a red week, and that is one of those other reasons that we're so happy we were able to come out with a positive return, because we outperformed the S&P 500 index last week by 1.56%. So that was a super, super solid performance. IPOF, this one's running down a little bit. We've got until September 17th to wait. So, the thesis on this one has always been the same. We're hoping there's a little bit of activity in the SPAC market, specifically with with that one. If this could get back up above 10, it's at, I think, 990-ish right now. Yeah, 990 on the dot is where it closed on Friday. Just going to let that one sit in the back of the portfolio, let it ride. We can only really lose 300 more bucks on it over the next month and a half, so I'm perfectly happy just letting that one sit and play out how it will. PSTH is, you know, the new option buying play that we added last week. We made a whole video about it on our YouTube channel, so if you're interested in hearing a little bit more about that setup, feel free to click over to our YouTube channel and take a watch of that video. So I'm not going to spend too much time on the stream explaining it tonight, but pulled a quick 75 bucks of profit. PSTH looks like it's been rebounding decently off this low 20 level, which is what we've been talking about. And if we can get a little bit of movement up in this red line that we've drawn here, is the point at which we'll get a 100% return on this. So it's really not out of the question that we can get some sort of a rebound here. And to the point we make in that video, if we go back to the 180-day chart, it really isn't that big of an ask to get just a little bit of a rebound here to that max profit level. And if it starts coming back up to the mid-20s, we're going to be looking at some very, very nice profit on that one. Amazon and Pinterest are a couple good ones to talk about here. Because Amazon, admittedly, we got a little bit lucky here. We set up an iron condor, and I think if I pull up my Amazon chart, I could still see the legs that, no, I think I got rid of the drawing. Oh, here they are. Yeah, so heading into earnings, if we just ignore this and scroll to the left a little bit, this is what we were seeing. We saw that it was trading roughly, I think the better way to illustrate this is going to be looking at the 20-day range, and it's not going to let me scroll through that, but this is kind of what we were looking at, right? 20-day chart, it was trading about dead in the middle of that range. The expected move was illustrated by the red lines that we have above and below. So knowing what we know, if a stock moves below the expected move, we're going to make money if we sell options. So we sold an iron condor with short legs around these red lines that lined up really nicely with what looked to be support back on July 19th and roughly what looked to be resistance between July 7th and the 13th. So we're really happy with how the play set up, but spoiler alert, it dropped well below that. So we had to, luckily we got out of this right before earnings. So what we did was we sold this at 420 during the morning and put an order in at 390 to close during the day. And it filled literally 6 minutes before the market closed. So we were able to take pretty much free profit and not have to worry about the earnings risk that we saw right here. So that admittedly was a little bit lucky. We would have had a bigger loss on that had that not been closed out. But that's part of the plan when we head into a trade is our exit strategy. That was the exit strategy. We were happy to take any profit before and not have to worry about earnings risk. So, that one played out nicely for us. We were not so lucky on Pinterest, which also had earnings same exact time Thursday after market. So same deal here, right? If we look at the chart the way that it was presented to us before earnings, we see that in the 20-day range, it's trading almost dead in the middle. So there's decent support, decent resistance, and we plotted out the expected move of the stock post earnings on this chart. Came out to a short leg of roughly 81 on the call side and 66 on the put side, I think is what we did. But, another spoiler, almost identically to Amazon, it dropped right through that bottom level of support that we saw and continued downward. The advantage with the iron condor that we went with is that, our losses were relatively limited. If we sold a strangle, the put that we sold would have been obliterated, and that would have been a tough position to recover from. But despite the fact that this moved so sharply against us, moved outside of the expected move that we saw, and put our initial position into a loss, one thing that we did was really nice, and I hope this is still up here. Awesome. So we were able to kind of save this position a little bit, right? Initially, if we were to close this out for $1 on both sides, $1 total, what we would have been looking at was a $285 loss. So 285 is the max loss, and that's the loss we would have taken if Pinterest finished outside of these red lines. And as you can see, it finished pretty clearly outside of those red lines. So what did we do to save the play? The first thing we did is to think of our iron condor in a literal sense as two different credit spreads, because that's what an iron condor is. You have a credit spread on the top side to play it down, and then a credit spread on the bottom side to play it up, and as a result, you get a position where you hit max profit if it stays between the two areas that you're playing it both up and down from. So that didn't happen. It broke right through there. But, to manage the position, here's how we viewed this. The 81-82 strike calls, it obviously was going to finish below this red line. So we let those ride. We took max profit on that individual side of the credit spread. For the 65-66 strike put credit spread, The max loss on that was going to be $1. If you took a look at 65 on the chart, it really did not look promising that it was going to get back up there. So we closed these out for 95 cents. Had we let those run their course, we would have had to close out for $1. So, a loss of 365 as opposed to 390 if we had let that run. So, we saved 25 bucks on that side. So not too bad. That's already 25 less than the max loss of 285 we could have taken. And then beyond that, what we did was we added some 55 strike puts, and you can see that 55 level illustrated by the red line that we have drawn right here. What we were able to do from that is, one, take advantage of this huge drop, the implied volatility. We don't have it charted right here, but if we did, you would see that it was still relatively elevated, because anytime post earnings, the implied volatility is going to dry up, but at the same time, such a big move post earnings, that first 5, 10, 15 minutes in market, you're still going to see some elevated implied volatility. So we took advantage of that to sell some 55 strike puts. So we now are in a position where we had this new leg. We closed this out, and now our new lower bound was 55. Now that wasn't going to make the entire loss back, but we made 90 bucks of it back. And in the end, a position where our initial max loss was going to be $285, we ended up only losing 170. So to us, I think that's a pretty big win, right? We're not going to win every single trade. We put ourselves in positions where a majority of the time we're going to win trades because we put numbers and mathematics on our side. But, when we have losers like this, it's important to know how to manage those losers. And that's exactly what we did with Pinterest. We did a good job getting out for far less than max loss, essentially turning this into a trade with a loss that we could afford, and we're going to live to trade another day. That's not going to kill us. So we were happy with how we handled Pinterest. Amazon, we got a little bit lucky on, but all in all, those earning plays right there, lost us 150 bucks. In the scheme of things, that is small peanuts. We've got another big earnings week coming up this week, and we're definitely going to touch a little bit on that later in the stream tonight, because I think even though the trades that we didn't work, I make this point a lot. It's important not to conflate a losing trade with a dumb trade. Smart trades can lose money because you can make smart trades on a week-to-week, month-to-month basis, and you're going to have some losers because no one wins 100% of the time. So if any of you who are watching along right now did join along with us, because I know we had some people, unfortunately, who joined in on that one, it's just the important point to hammer home is that it was just bad luck. In the long run, the probabilities are going to work in our favor. We could see that demonstrated by our year-to-date performance, where our graph just trends up and to the right. And we're going to keep going back to these earnings plays because we're just going to trust the numbers and trust that we're going to revert to the mean and continue to bring in profit on high probability plays. So keep your eyes peeled. We're going to have some more of those this upcoming week. Moving further down the list for the recap from last week, BBIG moved up a little bit. Those calls gained some value, so that was offset a tiny bit, but pulled about 200 bucks of profit. Not too bad. None of these positions that we're in right now, I can start to go on this little tangent quickly, but I'm very, very hesitant about the market right now, which I feel like I say every single week. So I don't want to have too big of a position in one thing. I think portfolio diversity and keeping some cash on the sidelines right now is incredibly important in having a successful strategy for the current setup that we have in the market. So when you take a look down, the quantity might be a little larger, and the quantity of profit and loss might be a little bit smaller. So more plays that give me some smaller gains, and as we can see, they work together to add up to some really nice returns. Despite the fact that objectively, I think what I had in play last week was pretty conservative. SOL, FFIE, DD, and CLOV, those are trades that we had been riding for a couple weeks. FFIE was new, as you can see indicated right there, and then we added to the SOL position. But these all turned out really nicely for us, and then we were able to pull about 1,400 bucks. So these premium chasing plays at the bottom that we had wrap up for us this week were kind of our big winners that powered us to a profitable week, in addition to being relatively conservative and not taking big losses anywhere else. So if we take a quick look at these, just to hammer home the point of the process and the strategy that we're putting into play, we started playing CLOV at 920 on July 12th, and before the end of the month, the stock had dropped 12.28% on us. However, as you can see demonstrated right here in columns J and K, we continued to lower that break-even price by putting our HC wheel strategy into play, continuing to sell puts, slightly increasing the position, rolling our puts out and down, and we finally got to a position where it finished above $8, which is the strike where we ultimately rolled our puts to, And all in all, we took a $560 profit off about $8,000 in collateral, which is good for, $560 off $8,000 in collateral is a 7% return on capital, which we achieved in just 2.5 weeks, and that annualizes to almost 300%. So if any of you who are following along with us are kind of newer to option selling and are used to the option buying world, where every now and then you'll see someone post a gain of, oh, I made 50, I made 75, 100, 200% on a trade. That's great for them, but in the long run, that type of a strategy, you're taking on too much risk. There's going to be far more losers, and it's just not a long-term, consistent, winning, and profitable strategy. What we do here is target gains like this that are consistent and repeatable, high probability, because we're always bringing our cost basis and break-even price down, and we're just going to keep compounding these gains one after another after another. CLOV is an example that even when the stock you pick goes down, you could still pull some really nice returns if you identify solid premium opportunities, which we've done. SOL, the tab right next to it, exact same deal, right? We started getting in on this July 8th, so less than a month ago, 3 weeks ago, we got in at 810, dropped down to 749, which is a 7.5% decrease, and that's a pretty big decrease objectively on a stock in a 3-week period. But entered at 810, our initial break-even price was 725. We kept following the process that we've outlined with the HT wheel, and through those 3 weeks that we had during that duration of the trade, we were able to get our break-even price from 725 down to 642, which represents a 20.74% reduction from the starting point. So in plain English, we entered into a trade where if over those 3 weeks on the stock we picked, it didn't go down 20%, we were going to make money. So as far as actual numbers are concerned, we were able to make $665 off about $3,400 in collateral, which is good for a 20% return in just over 3 weeks. And that annualizes to almost 2,000%, right? The 1747% annualized return that we had right there. So super happy about how that turned out. We might look to get back in if these two dip at any point in the near future, because they offer some really, really nice premiums that we'd be happy to go back to. But kind of rounding out our weekly recap, that's where some of this money came from that powered us to a really nice and profitable week. But with that said, let's move along to what we have for next week, because, it's easy to learn and take a look back at what we did before. But what is probably more relevant and helpful to you guys who are watching right now is what are we doing for the upcoming week, and where do we think is a good place to have our money right now. Ian in the YouTube chat, I see that shout out for UPWK. Well, that'll be the first thing we take a look at after we get through this list. And I'm going to take 1 second really quickly to take a sip of water, and we are going to get right into it. All right. Normally my sips of water are very refreshing, but my cup was way fuller than I thought it was, and I just spilled all down the front of my shirt. So good thing we don't have the webcam going right now. But, week to week basis, a lot of what we're holding is kind of the same as what we just reviewed, right? UWMC, you see it at the top of the list. The thesis with that is not really changed. We like the premium. 7.5 is a really good price point. If you're wondering about ICLM, we don't even talk about that one because it's a tiny position and boring, and I'm just incredibly stubborn and determined to keep lowering my break-even price, which you could see by the tiny increments that I've subtracted on a week-to-week basis. I am determined to make this a profitable play, even though I have very little capital tied up in it. It's not really something I would enter right now if you were looking for a trade. But Corsair, like we mentioned, they've got earnings this upcoming week. We could take a look at that one really quickly. I think that could be helpful. Earnings on August 3rd before markets. That's going to be Tuesday morning that we have the earnings for Corsair. Let's pull the chart up. So you can see it's kind of been on a little bit of a downtrend. I think if we go to the 180-day chart, you'll see it a little bit better. Yeah, right. We had a little bit of a spike off the bat, and this is when we started playing it because we had Corsair on our watch list for a while, and this speaks a little bit to the value of having stocks on your watch list. We knew that it was trading in the low 30s, and that was a decent opportunity, I think a relatively fair valuation for the stock. And then there was this massive jump from 31 up past 40. And while we don't want to own the stock at 40 because we've been watching it and we know that in the low 30s is a price that we'd be comfortable to have it at, the amount of premium that we were able to collect and the break-even price it gave us looked attractive at the time. Now, as of right now, it's below our break-even price. So if we could go back in time, we probably wouldn't have done this, but one of those things where just because it's a losing trade right now, one, doesn't mean it was a dumb idea, and two, doesn't mean that we can't turn it into a winner. So as of, we can go back to the trade breakout tab really quickly, right? We sold 35 strike puts when it was trading at 38.50 with a really nice 33.82 break-even price. So that seemed really nice on such a consistent stock. Prinsmeister, I got you. We'll take a look at Mrna as well. But Corsair fell back down pretty quickly. We were assigned on the shares. We entered into a strangle. That further lowered our break-even price, yada, yada, yada. And we're now at a point where we hold 1,500 shares and have a break-even price of 30.37. We've always said that we would want to get into, selling cash-secured puts if it was advantageous to do so, because for those of you who are familiar with our HT wheel process, getting assigned those shares and selling covered calls is step one. Step two, or even part of that same step, is entering into a covered strangle where we would sell 15 cash secured puts to further lower our break-even price. And if you do them at a 1-to-1 ratio, meaning if you have 1,500 shares and sell 15 covered calls, selling 15 cash secured puts is a dollar for dollar or cent for cent reduction of your basis. So what I'm heavily considering doing this week, headed into earnings, since the premium is still decently jacked up, right? If we take a look at these 27.5 strike puts, we see an option that has a break-even price individually of about, let's see what it's going to be, just under 26.50. So that is here on the chart, 26, roughly 40. This is the break-even price of that individual leg of the trade if we were to add it to 27.5 strike puts. If we take a look a little bit further back at the chart, how does that line up with the price action in the stock? As you can see, it runs into a little bit of what looked like resistance and then subsequently support back in the back end of 2020. This is October and November. So I think this is an attractive entry point. One, if you're not in the play, period, I think taking advantage of the premium that this provides, because if this thing levels out or shoots up, these are going to be worthless pretty quickly, even though they have an August 20th expiry. But with that in mind, for our purposes, what we could do is sell 15 of these for, $1.10, and then we would be in a position where our break-even price would be this minus 1.1, and we now would have a 29.27 break-even price, which is right around where the stock is. So we would put ourselves in a position where if Corsair had decent earnings or even just traded flat after earnings, we would make a decent amount of money between now and August 20th. But like we always mention, the downside is so important to take a look at. This is the chart since it started trading back in September. There's definitely some potential downside. This thing's been trading for less than a year on the market. But the fact that this thing is leveled out so long around the low 30s, has this relative support here, and that's a trade where I can get into that has that kind of a break-even price. And using our favorite little indicator RSI, which lets us know that it's somewhat oversold because it's below 50. I mean, nowhere near what it was back on the 19th before it bounced back up from 28 up into the 30s. But it's due for some sort of a rebound, and even if it doesn't, we're perfectly happy to just keep moving this position forward 1 month at a time and continuing to lower that break-even price. Looking ahead to September premiums, there's still some really solid premium out there. This will drop off a little bit after they announce earnings. However, there's still $1.50, $2 a piece on a covered call, which would get us down to 27-ish, and that is a price, quite frankly, I'd be perfectly comfortable holding Corsair at for the immediate future. So that's why I think this is a great entry point. We're likely going to be adding 15 of the 27.5 strike puts this week to take advantage of that. And I may even skew towards the 25 strike, excuse me. Never mind. I was looking at September. Okay, yeah, I was looking at September for a second. I was going to say this is way too good of a deal right there. But yeah, the 27.5 where we get just over $1 of premium and get our break-even price down below 30 and into the high 20s, is a decent place to continue this trade from, and that is going to be what I do this week. So that kind of closes the loop there. Palantir is one that we also added on Friday for this upcoming week. We sold a 21 strike put for 21 cents, meaning we have a $20.79 break-even price on that. And this is one just, I think a decent value if we purely just look at the chart right here. I've got all sorts of lines drawn on it because, again, it's one of those that I've had on my watch list for a little bit of time. And I think is a decent value at this point, right? If we look back historically, what's been happening over the past year or so, it broke up past 20 back in November of last year. And it's a decent company. A lot of people will throw some outlandish things out there and say something about the fact that they think it's going to, quadruple in the next year or two. I think that's insane. But for the purposes of what we do, right, we don't need a stock to quadruple or even double or even, go up at all for us to have success in the strategies that we run. But with that, taking a look at this chart, there was some decent resistance down around this 21.1 level. So I told myself anytime that I had the opportunity to make a trade on a week-to-week basis where I could get a break-even price below that, I think that's a really solid entry, right? So we are now in a trade where I'm going to keep that on there because that's basically me charting support. But this line right here, 2079, I can't quite hit it close enough. This is now my break-even price for the next 5 days. We have a relatively low amount of collateral. If you take a look here at the amount of collateral these required, if you wanted to just sell one of them, which would only get you $21, but point being, fully cash secured, this takes $2,000. It's a 1% return on risk, but as we know, a 1% return a week is going to get you to a very nice annualized number. So no need to scoff at that in the first place. But what's more attractive about this is the return on capital number that we see if we divide that $21 of profit by the $794 buying power effect that it has, meaning we get a 2.6% weekly return on what should be decently safe, in my opinion, from looking at the chart, looking at the recent price action. So that's when we started with a small-ish position, right? We sold 20 of them, so if it hits max profit for us, we're going to get $420. Nice. And that is really that. There's nothing too crazy as far as earnings or anything like that coming up. Palantir, let's take a look. 8/12/21. Okay, that's right. Next Thursday is earnings. So not in the period that we're selling for, but next Thursday. And with that setup, we could really even consider this a 10-day play for earnings because a 10-day play is you selling a cash secured put that is basically at or just out of the money and relying on the fact that historically it's been proven that companies run up before earnings. More often than not, they are green at the week prior to earnings. So using that to our advantage as well. I really like the way this sets up. And if we do get assigned, right, it's a little bit of a 1-2 punch. We always like to have steps 2 and 3 in mind when we're entering into a trade. So step 1, obviously, is selling these cash secured puts. But step 2 would be taking assignment at a 20.8 basis roughly, and then going into selling calls, which could get us down near, $20 a share for the basis. So these would be for earnings week. So premium's a little bit elevated, but still not crazy. And that's one of the things that kind of turned me off to Palantir for a little bit of time is the fact that, premium isn't necessarily through the roof for something that's been swinging pretty wildly over the past month or so. But, that's okay. I think it's still enough there to make it a worthwhile trade. And that's why we entered into it for the upcoming week. Now that brings us to Zillow, which is finally, we mentioned we like to go to this week in, week out every time we see it get around 100. Zillow has earnings this week on Thursday. So we could finally consider this a little bit of an earnings play. Let's pull it up right here really quickly. You can see this yellow number right here is the expected move on earnings, right? $9.28. So with that in mind, we could take the $106.26 closing price on Friday and subtract 9.28, that expected move that we have up here. And that gets you with, a lower expected range of 96.98. So that comes up to just about here on the chart, 96.98, close enough. So that's where the way that the options are priced suggests that Zillow will drop down to here. That expected. If there's bad news and it drops, this is where the market expects it to drop to. So with that in mind, we're going to go just beyond that and sell 95 strike puts, where if there's bad news and it drops to where the market expects, we're still going to hit max profit on our trade. So that's how we use that idea of expected move to decide where we want to sell these puts. And on a week-to-week basis before earnings, getting a little over $1 was decent value around the 100 area. With earnings coming up, we were able to get $1.30, I think it was. Yeah, $1.30 in the 95 area, right? We had to go decently out of the money. And, there's some volume down here, but there's also a large amount of volume far out of the money for Zillow as well. So not really too much to make out of the option volume analysis on that one. However, I think this is a really, really nice setup at 95 strike. We know that if we sold a 95 strike put for $1.30, that's going to get us a 93.70 break-even price, which is even lower than this line right here. This is just our max profit line that's been plotted. And if you want to read a little bit more about this, quick plug for the website that we've got right here. We posted our trade ideas for Zillow today, and if we pop into this one, we outlined it a little bit more, right? We talked about our potential max profit. We have an 11.82% downside cushion. That red line on there outlines where our max profit point is. And something interesting that we have on here as well is their historical performance during earnings. And to make this a little bit bigger, we could actually just pull this tab up on Thinkorswim. They really only had one sizable pre-earnings drop, and that was back in Q2 of 2019 when they went from 49 to 42, so a $7 drop. But on a percentage basis, that would be enough to put our position in a little bit of hot water. Other than that, though, they've had some incredible growth, either just big jumps, decent jumps, big jump, big jump, big jump, and then just slow grind downwards, where this kind of movement wouldn't really hurt us because we would have to have a pretty sharp drop like this to start to be in a position where the option that we sold would be losing us money. So from a historical earnings standpoint, I really like the way that this sets up. Even just a bigger look at Zillow and what they do. They're trying to take housing and real estate digital, which I think is, from a convenience perspective, something that is probably going to be happening sooner rather than later. The housing market's been red hot. If we back up to the 180-day chart, I mean, this thing topped out at 208 back in February, so there's definitely some upside on this stock. It's getting back down around this 100 level of support, which has been a really strong level of support over the past 180 days, as we've seen. What scares me a little bit if we back it up to a year is that it was trading, mid 60s, 70s before shooting up here. But at the same time, I think that kind of a pullback would take multiple months to get back down to that level. I don't foresee some sort of catastrophic earnings drop for Zillow. So I love the fact that we're able to get some really nice premium on Zillow that far out of the money. Like we've mentioned right here, our exit plan. We're just going to let this thing ride until expiry and cycle into an HT wheel strategy. However, if Monday, Tuesday, Wednesday, this thing runs up, we will be perfectly happy to close things out for like 65, 70 cents a piece and collect that 40 to 50% of max profit without even having to worry about the risk that earnings carries. So that's our plan for that one. Next one on the list that we brought up is going to be ATOS. That's the next one, at least, that I want to talk about, because that's another new trade that we opened up for the upcoming week, and we wrote another post about it today. So if you want to read a little bit more about these and get some more info other than the surface level conversations we're having quickly here on the stream, this is a great place to go to on our website and to our blog and get a little bit more detail behind the numbers. But long story short on ATOS, all sorts of volatility, right? We're looking at the 1 year chart right now. Bottomed out at 81 cents back in December. It almost hit $10 a share back at the end of June and is falling pretty hard back down to $3 a share. But this type of fall, RSI is getting back in the heavily oversold area. There should be some decent support right in the mid $2-ish area. So we view this as a really nice entry point, and the premium on the options right now is really nice as well. If you take a look at it just from an ROR perspective, right? If you sold these fully cash secured, and though we do like to use some leverage, but selling fully cash secured admittedly is a little bit safer. But with that in mind, you could sell a 3-strike put and put yourself in a position where you're pulling a 12.15% gain on this stock in a week, just as long as it trades flat or rebounds from here. Just, in plain English, as long as it stays above 3. So selling that 3-strike put, I think, is an awesome value. And off the bat, if you jump in now and get something between 30 and 35 cents a premium on that, not only will you make that huge return if it stays above 3, your break-even price is also roughly 270. So if we pull it into the 20-day chart right here, right, your break-even price is still below any price that this stock has seen in the last month. So I think we should have some sort of decent rebound. Even, we were looking at the 1 year chart before, but if we zoom into the 1 month chart, RSI is primed for some sort of a rebound right here. It's deep, deep, deep blue. So perfectly happy with that one. And again, one of the, ideas behind the HT wheel strategy that we run off the bat is position sizing. And this is one where I think it is incredibly important. This isn't one where, you've got, I've got $2,000 to invest. I'm going to sell $2,000 worth of cash secured puts. This is definitely one where it's a good idea to scale into this. And we're using maybe about a third of what we would be fully comfortable allocating to this trade. And the reason that I say that is for what we see when we go back out to the 180-day chart, right? And I've drawn this red line right here because this, I think, is potentially tangible downside in the near future, because that runs into where we started to see some price chop back in the end of April and May. We saw a little bit of chop in this, $2.10 to $2.30 area throughout 2021 so far. So this thing keep dropping? Absolutely, but that's why we want to start off with a little bit smaller position. That's why we want to allocate maybe about a third of the money that we're comfortable allocating, because right now the play that we have set up has about, I think, a 278 break-even price because we got 22 cents on those 3 strike puts that we sold. But, we could take assignment at 2.78 or whatever. And then looking forward to the next weeks, we'll be able to sell either just at the money or out of the money calls for maybe 20 cents a pop, and then leg into a strangle, which could knock another 20 cents off of our break-even price. And all of a sudden, we have a trade with a $2.20 break-even price, right? If we have our initial break-even of 280 and we open 2 trades that knock, 20, 25 cents off of it, we're right down to a break-even price at this red level. So it's really not even so much for what's going on next week that I like about this trade. And I do like what's going on next week because these ROR numbers are enormous. But it's about that step 2 and step 3, and where I think I could have my break-even price by Friday afternoon on this trade, which is what I think makes entry right now so attractive. And, we talk about the downside risk a lot here because that's just something super important to consider. And it's how we take a lot of the trades that move against us and turn them into winners. But, there's an equally likely chance this thing levels out at 3, runs back up. We never even have to talk about this again. So, again, love the way that this sets up. A little bit more detail talking about the numbers is on our blog if you want to take a look at that post. But that is 2 of the 3 new trades. Actually, no, that's all 3 of them. Palantir, Zillow, ATOS. We had a comment from Sunset Jesus in the Twitch chat saying he sees PSTH on there. Are we some tauntards? I think I would classify us as that right now. We don't often buy options, but the setup on this was super, super nice for an in-the-money call with basically 0 extrinsic value on it. So any sort of a rebound, like we mentioned a little bit earlier on the stream with PSTH, is going to pay off big time for us, right? So if this thing rebounds to $22 a share, these are going to be worth 3, and all of a sudden we've made $2,400 off that investment, where a rebound to 3 on the PSTH chart would barely look like anything at all, right? It's just that red line. So very small rebound could lead to some very nice profit for us. So that's what we're looking forward to, and that's why we're big fans of this PSTH trade option buying that we had. We've got Prinzmeister in the Twitch chat saying ATOS has earnings on the 11th. Do we think that the premiums are still going to be there afterwards? Shout out Rakesh in the YouTube chat. Appreciate that. Appreciate the kind words. But back to Prinzmeister's point about ATOS earnings on the 11th. Do I think premiums will still be there afterwards? Short answer, yes. With a healthcare stock like ATOS, you are going to have some sort of premium for earnings, but so much of the premium on healthcare as opposed to other industries is derived from things like trial data and results from, FDA approvals and things like that, because those have far more bearing on the success of a biotech company than, just reporting what's been going on operationally from a company's perspective. So I don't think that that earnings are going to ruin the premium for us. I think the fact that the chart on the last 180, good Lord, talking over myself here. I think the fact that the chart over the last 180 days looking like this is a much bigger factor into why we see that kind of premium in the options. And at least over the next few weeks, I don't think that's going anywhere. So if it does dry up, we're going to have a trade where we've got a basis, hopefully sub 2 over the next few weeks. But I don't anticipate this one will last that long. Question from Vladislav Kim in the YouTube chat. Vladislav, what's going on, man? Selling space weekly puts. That one right now, to tease another little thing we've got going, the watch list, if I pop it open. We've got space on our watch list. I currently have it listed with, if I could scroll down here without it continuing to reload on me, I've got a $20.50 entry price target on space. So that might seem ridiculously conservative, and it probably is, but let's take a look at space, right? We saw what happened. There's this big lead up to this event where they were going to be lifting off on a rocket to go to outer space, and it worked. But despite that, the stock dropped almost 50% from the highs. It did drop 50% from the highs. Even after that drop, though, let's take a look at another thing for space, and that is going to be the market cap that we want to take a look at. Their market cap right now is $7.22 billion. AAL stock, for example, American Airlines, is worth $13 billion, right? So you have a national airline that's worth $13 billion. And this company that has taken a few people to space once and hasn't even started commercial operations is worth half of that. For me, from a valuation perspective, that just isn't there. Operationally, what they have currently created and the amount of addressable market and just the capacity and the amount of revenue they could potentially bring in does not dictate this kind of valuation. So I think 30 is still overvalued for what was going on. A lot of the run up that we saw chart wise was just purely hype and people just buying stock. None of it was fundamentally based off, the potential future for the company. There could be some competition even for it with what Jeff Bezos was doing as well. So I wouldn't want, I guess I should back up by saying, number one rule for when we're entering a trade and selling puts on something is, would we want to own this stock long term at the level that we're selling puts at? The answer for me is I don't want to own, Virgin Galactic anywhere near this level. So that's why I have it in my watch list with a 20.5 strike potential target entry. And then that'll alert us with highlighting the word yes right here if we get to that point. So anywhere below here, I think, is a lot better place to own it. Just be patient. If it runs back up to 50, whatever. We say so often that I would much rather miss out on a winning trade than be stuck in a losing trade, and getting in right here with this valuation could potentially turn into one of those losers. So with that said, circling back to what we had on a weekly basis heading into this week, IGC, we're just going to let this one ride. We've talked about that before. I don't know, maybe entry into the 2-strike puts would be decent right now. That'd probably be the only thing that I would want to look at for that. But with that said, we are very cautious about where the market currently stands. It's up 0.5% already futures. If we take a look at SPY, the S&P 500 ETF, I mean, we don't even have anything in the past 180 days that's even made a blip as far as pullbacks are concerned. And for those of you who might be newer to the market, this probably seems, very normal, right? You're just going to buy stuff and it's going to go up forever. However, let's back it up to the 3-year. And, every so often we see decent drawbacks in the market. And, we're not going to have another COVID crash. But consequently, something like what happened in the back end of 2018, where it dropped from 300 down to about 230, and shaved 20% off the value of the S&P 500, that is a relatively regular occurrence. Not regular in the fact that it's going to happen every month or every year, but you take a look at the price action that we've seen from the bottom last year in March 20, it's been a year and 4 or 5 months since that, and we haven't had any sort of decent downturn in the market. So, to further that point, if we do have any sort of slightly red day in the market and you're finding yourself in a position where, you're on your way to be margin called, or you're panicking because your positions are losing way too much of your money, I would suggest that you evaluate the level of risk that you have taken in your account, because really we haven't seen anything bad happen in the last 17, 18 months in the market. We want to be prepared for when something like that does happen. When we do see a drawback, we don't want to be someone who's fighting off a margin call. We want to be someone who has cash on the sidelines ready to deploy and attack those discounted prices that we see. So right now, that's exactly what you see with what we have set up for the upcoming week. We've got some safer plays that we have some cash sitting in. But in general, the amount of plays that we have right here set up for the upcoming week is a lot shorter than the typical length that we have in our portfolio. So we're keeping cash on the sidelines, waiting for something to happen, really. And, the market could keep running up forever. If that happens, we're going to be hitting profit on all of these and still be pulling a really nice week-to-week return. But we do want to be cautious that we have enough money on the sideline at the same time to be able to act when something bad does happen. So that is, where we're at for this upcoming week. And now it is time for us to get into some of the suggestions from the chat. We had UPWK from Ian Kramer. We had PSTH. No, we talked about that for a second. And we also have, let's see, there was one more in there. I know it. Mrna from Prinsmeister. So before we do that, a quick shameless plug for what we're doing. We've talked so long. We've got our Discord server, right, where we've been alerting all of our different trades. And tomorrow we've been teasing the fact for a little bit of time that we were going to make that part of some sort of HT premium package. And tomorrow morning is going to be when that starts. So starting tomorrow, all of our trade alerts, our live trade alerts are going to be as, an additional part of that HT premium package. If you want to sign up to receive those, you could do so by going over to our website, clicking on home, and then anywhere on this HT premium section, you should be able to click on anywhere and get to a screen where you're logged in and able to subscribe to the plan, right? If you check the plans, I think we've got some decently affordable stuff, right? It's less than $1 a day. I hope that a lot of the trades that we have set up are going to at least make you enough to where, what you're paying every month here is not even a consideration for the value of what we're providing. And it's not just those trade alerts, right? We've got trade plans like we saw that we had written out in the blog today. We're going to be doing these for every single trade that we open. So you're going to have something like this for every single trade that you get alerted to. So not only will you have the knowledge that we've entered into the trade, you're going to know exactly what the plan is, exactly what the idea behind the plan is, and hopefully be able to act a little bit better based off that. We're going to have our own private members only chat room in the Discord server. You're going to have access to that portfolio tracker that we're always taking a look at. You're also going to have access to our watch list, which I can't click on because I'm signed in, or I'm not signed in rather, but it's essentially this embedded into that web page with notes and entry targets for everything that we have our eyes on. And then we also have some option scanners that you could load directly into Thinkorswim, and then an affiliate program that we're going to be rolling out. So that is the thick of it. I'm probably going to put an announcement on our Discord server about that. If you guys have any questions, feel free to let me know. Jules, if you want to do Venmo, I might be able to figure out something like that. But for the recurring program, we do PayPal and then credit cards as of right now for accepting payments. So that is what we're currently looking at. And any criticism at all, right? Because the whole idea the whole time has been to keep the community we have. We always want to keep this, constructive discussion going on. So the only thing I'm going to hide really that already exists are the live trade alerts. Outside of that, everything that's part of that HT premium package is, us putting something together that will increase our offerings to you as opposed to just, pulling the rug out and putting everything behind a paywall. That's not going to be what happens. We're still going to have our live streams every single week. We're still going to be making YouTube videos. We'll still be talking and fleshing out ideas in the chat. But, everything we just outlined will also be additionally added as part of the HT premium package. And I think we're going to have some really nice, some really high value stuff provided as a result of that. So any questions, criticism, comments, feel free to get at me with those. Even if you say, hey, this is a horrible idea, this sucks, it needs to be like this, this, and this, I'm perfectly happy to hear that kind of feedback as well, because I want to provide the best package that we possibly can to you guys and get to a position where I've mentioned so much in full transparency that my personal goal is to be able to help you guys out and transition to doing something like this full time. And with that, the more involvement that we get in programs like this, I'll be able to allocate more of my time and hopefully better improve the offerings and spend more time on doing things like this. So, hopefully a win-win situation with that. And that will be the end of my little spiel. So let's get into I'll have an announcement in the Discord server with some more details, but let's get into what we talked about. Ian wanted to see UPWK. It beat earnings and this chat message results, so I can just pull the chat onto the screen. We want to take a look at UPWK. They beat earnings yet again, but are down 14% due to high volume of earnings plays. All right, and we've got Jay saying, where can I download the HT Profit Tracker? If you go to this link, and this link starting tomorrow is going to be part of that HT Premium package. But if If you go to the link we have provided on the website there to get to that, you just go to File, you go to Download. You could download it into Microsoft Excel and run this offline, or you can make a copy of this and run it through Google Sheets the way that we do. So there are a lot of different ways to use this. And another thing that we're going to have working at some point, hopefully in the next month or two, there are a lot of different steps in creating it, is an offline Excel profit tracker, where literally instead of manually inserting a lot of this stuff, you're clicking buttons, it's responsive, there's a lot of macros that run it, and hopefully that alone will be able to provide some really awesome value for tracking the type of strategies that we run in here. So without further ado and getting running off into tangents about those offerings, let's talk about the ticker that I just said and forgot the name of, UPWK. Again, the thing about UPWK is the fact that they beat earnings down over 14% due to the high volume of the earnings plays. So first thing off the bat, right, this is the 3-year chart, so maybe that might not be the most helpful thing in the world. Let's take a look at the 180. Trading decently, I mean, it's kind of doubled in the last 180 days. So that gives me a little bit of pause. Pick a tune in the YouTube chat. We'll throw CLF on the list up next. It looks like maybe some support levels we can identify are where we saw it bottom out right around here and here. And if we extend that line to the left really quickly, we'll see that lines up with the point of resistance back in December. So this looks like a pretty solid area of support that we could maybe say, hey, downside potential on this stock is down to 40. Taking a quick look back at those earning results, it looks like, yes, very small beat on EPS. Let me check revenue. And let's see, the shares are trading lower after the company reported Q2 earnings results and guided Q3 in FY21 guidance. That looks like it's just a headline, no associated. They beat on, it doesn't look like they beat, never mind, 124 versus 120. So they beat on revenue, beat on EPS, decent operations. I assume what they guided as far as Q3 and the rest of the year was downwards, which is why we saw what looks like a decent drop after earnings. But as we talk about entry point all the time, and when you have this kind of a drop off strong earnings but poor-ish future guidance, not the worst time to get in on one. And you could see that illustrated from last Friday when it bottomed out at 48.5 and got back above 50. But let's take what we looked at up front. We said, hey, 40 looks like decent support. There could be another level-ish of support around here. I was trying to line up the bottoms that we saw in June 21st and July 19th, but doesn't look like that really corresponds with anything else on the chart, except for, it kind of cuts right through all these. So maybe this isn't going to be as significant of a level, but we know that 40 looks good. Let's work off of that. So taking a look at the options chain, what do we see off the bat is they have monthly options. So this is one where you might have to be a little bit patient to get that final reward. And let's see what we could look at from an ROR perspective. 2.93%. How long do we have until the 20th? We got 19 days. We've got 1 to 3 weeks on here. For a 3-week trade, getting 1%-ish a week is not bad, 47.5. But the question is 47.5 a price that it's going to be able to reach in the next 3 weeks? And that is where it gets a little bit different. We can use the idea that, we saw this bottom out in June 18th, July 19th-ish, and while that didn't really correspond with anything that we saw further back in the year, maybe shortish term, 47.5 could be a good place to start. 47.5 right there is that 3% roughly ROR. And the last thing we do want to check is maintenance requirement, right? So we knew that if we wanted to sell one 47.5 strike put, that's going to be $4,750 fully cash secured. And this is where the trade gets a lot more interesting, because there's some really, really relaxed margin requirements on this one, right? So normally you'd be getting 125 of max profit off of 4,600 investment, but with some more relaxed margin requirements from the broker, you're getting 125 bucks off of a $607 in buying power, which is a 20.6% return. That is a monster number for a 3-week period like that. And again, 47.5 strike put for $1.30 a premium puts your break-even price at roughly $46.20, which on the chart is about here. So with that leverage in mind, with that margin in mind that we just took a look at, over the next 3 weeks, if this stock stays above this red line that we drew right here, we could pull a 20% return. And let's see, P-Cell added a little bit in the YouTube chat saying, the guided EPS in line, revenues above consensus. I don't hate this too much. Admittedly, I don't know a ton about the company. One good way to do that is UPKW under, fundamentals, UPKW. What am I doing? UPWK. That is my fault. UPWK. And there you go. We see that they operate online employment marketplace. They offer a platform that allows businesses with freelance labor and tools to hire, manage, and pay for completed work, and allow businesses to find, hire, and pay developers, etc. So really just a freelance website. I like the way, from a chart and numbers perspective, that the 47.5 strike puts line up. The only thing I would say to be cautious of, right, if you use this kind of leverage and you wanted to sell maybe 10 of these and put yourself in a position where you said, hey, I want to make $1,000 off this in the next 3 weeks. While that may only take $6,000 of buying power, just be wary of the fact that if this thing really moves against you and you get assigned, the full value of your position is going to be like 46 grand. So that is kind of the give and take with leveraged positions like this, which is why when I jump into leveraged positions like this, I always like to start off a little bit easier, right? So we can start off with maybe 5 of them and say, okay, we'll tie up $3,000 to pull a $600 return, and that'll be a 20% return on capital. And then if we, are assigned a $23,000 position, is at least manageable, right? That'd be roughly 15 to 18% of our overall portfolio. And again, we recognize that everyone has different portfolio sizes, which is why we try to focus so much on percent returns as opposed to dollar returns, because someone may be able to sell 30 of these while someone may be able to sell 1 or 2 of these. But the important part is that both of you at the base of it are going to be pulling a roughly 20% return on your capital. And that is the number that we try to focus on in here, because big account, small account, those return percentages are going to be the same regardless of the amount of money that you have in play. So I like this. Maybe be hesitant if you're taking advantage of that lowered margin requirement. Start with just a few of them off the bat and just be wary of what that overall position could be size-wise. But with that said, nothing that would really make me want to stay away here. There's a $3.58 implied move, and I believe that is an implied move to the next option expiry. So whereas so many of these weekly option and weekly stocks that we look at have an implied move that represents the implied move over the next 5 days, this is calculated based off of option price. So the implied move is going to be based off that next option expiry of August 20th. And this tells us, if we remember what we talked about a little bit earlier on the stream, if it closed at 51.79 and there's an expected 358 move, the lower end of the range that we can expect is 48.21. So a 47.5 strike put with the 46.20 break-even price should be well beyond that, and we have the numbers working in our favor with that. So, I like the idea of UPWK if you're looking for a position and that's a stock that you like. I think a great entry opportunity, because there's definitely some potential immediate upside with a gap to fill back to mid-50s, maybe back up to 60. But, at the same time, we mentioned 40 seems to be the lowish end of where it could pull back to if it does continue to pull back. So getting in with the trade that you're scaling in on, where you start with the 46 break-even price and then could maybe afford to enter into a strangle on that one out into September and lower that break-even price a little bit further, that could be a decent trade that'll get you come August 20th with the break-even price right around what we're looking for right here. So, UPWK, I like the setup on that if that's a stock that you're interested in. Next one that we wanted to look at is going to be Mrna, courtesy of Prinsmeister in the Twitch chat. So Mrna. And I believe, oh my goodness, this is a terrifying chart. And shout out to It's Dawn for the follow. Always love getting those notification messages when we're live on the stream. But taking a look at this thing is 3, 4, 5x'd basically in the last 180 days. That is horrifying. I think they've had some S&P 500 related news or something like that. Let's see what's going on here. I don't know if there's any. Prinzmeister, you recommended this one. If you've got anything that had this shoot to the front of your attention and know anything about this one, feel free to let me know. But I'd imagine this might just be coming forward with the rise in COVID cases that we've seen. Hold on, we've got something from P-Cell in the chat saying Thinkorswim shows move at 3, but next to IV shows a plus or minus 6 move. Let me take a look back at that. UPWK. That's a very good point. So here we go. We got another one. We've got Red Angel 64. Shout out to the follow. So yeah, I think that you might be right, P-Cell. I think this plus or minus 662 is what we're looking at right here for the implied move. So I do stand corrected on that one. I was always under the impression this was calculated based off the forward options that we were taking a look at. However, the 662 implied move might change things a little bit for how this thing sets up. So let's just quickly one time run that back. 51.79 minus 6.62, 45.17. So that puts you a little bit below the break-even price, which would suggest maybe, not that it's not safe, but that definitely is in play based off the implied volatility that we're seeing priced into the options. Getting back to Mrna, do I think this is a safe one to play? If you're looking at a bullish play, I would say absolutely not, because what day is this right here? This is July 15th. Just since then, it's risen 100 points, 33%, which, Mrna is not a small company. For that amount of price action and that big of a move, that is a huge move. I mean, but, let's finish out the process here. Let's take a look at what option premium's looking like for the upcoming week. Looks like the option premium starts to pop up here. You mentioned they've got earnings next week with decent premiums. Again, earnings normally aren't huge for biotech, but let's see. This would be a $300,000 position because you're selling 10-300 strike puts. Not a ton of leverage. I don't like the way that the premium sets up here. Yeah, Mrna I would stay away from. One thing that might be interesting though is, you've got a stock like this that's run up so much so quickly. Could a call credit spread be a safe way to potentially play a pullback on this while also protecting you from a huge loss if this thing continues to run into outer space? So I do kind of want to take a look at that really quickly while we have this one up. Let's switch this over to vertical so we can look at spreads, and let's figure out what we think might be a good number right here, right? Maybe we could use some implied move ideas here. The implied move's 20, so if we could maybe say that, okay, 373 might be the upward end of the range that we could see right here, so we'll plot that with 373. Let's make our short leg on the call spread. We'll make it 375 to be safe, although it looks like spreads on here are a little bit crazy. Hold on, let's take a look at what the single legs look like. Yeah, so the spreads on these are incredibly wide. 685 bid, 975 ask, 450 and 680. So it's not necessarily a fact that, when you look at these spreads, nothing's really happening and it's a negative. You should never do a sell in negative, because that is an automatic loss and someone will be happy to fill that. But, if this thing trades a little bit more Monday morning, stabilizes a little bit, I think we should be able to get, maybe a buck. I like the 370, 375 right here. If you can get anything above 2, I think that's really, really nice. That'll get you with a, almost a 50-50 trade. Now, again, spreads are really wide. I doubt something like that is going to stick, but might be a good one to keep an eye on, because a 370 short leg with a $2 credit means you have a 372 break-even price, which is basically right in line with that expected move. And I will say, P-Cell, to your point about expected move being plotted next to the volatility right here, what's interesting to me is that, if we use the theory that this is for the upcoming week, August 6th is the upcoming week as well, and that has a much bigger number than what we see up here. So I know for a fact this is expected move. This number may represent something else, but I'll definitely look into tonight the discrepancy that we're seeing between these numbers so we can get something nailed down as far as analyzing the potential outcomes for these trades based on the way that the options are priced. But Mrna, Prinzmeister, not a huge fan of taking a bullish position here, because like we always mention, sometimes there can be a long way down on a stock, and we don't want to be using our strategy in particular when that is the risk that something like this carries. However, after looking a little bit further, you might think it cools off a little bit in the near future. You could maybe, take it out to August 20th just to give yourself a little bit more time to wait for a pullback. And then you could pull something that is giving a 50% return on capital. So, not a terrible value prop right there. Dashio coming in the clutch, saying the number next to the volatility is the one standard deviation for the front week. Okay, I've got you. And standard deviation is going to be a little bit different than expected move. So standard deviation, expected move. There we go. Again, I feel like Dashio, you're always fact checking me. I love it. We can't afford to not have you in the stream. We would have had no idea what we were doing there for a second. So appreciate that right there. So mRNA, that's kind of it. Futu, F-U-T-U, is going to be the next one we take a look at. Excuse me, no. CLF from Pick a Tune. He said he shorted a strangle 1724 August 27th. That one looks like it might be getting a little bit dicey with it moving up over that 24 short leg on the call side for that 1724 strangle. These lines are basically irrelevant now. This was back for our analysis on earnings when we were taking a bullish position. That went pretty well. But this is one of those stocks where I loved it back in this 19, 20, 21 range because it's a steel company. Steel is still in high demand. There's still all sorts of supply chain issues that are going on, across the country and across the world, quite frankly. So having something in such high demand like that is a good thing to have in your portfolio. Two, there's some inflationary fears. Steel is a commodity. Commodities are a good thing to have in your portfolio during times of inflation. So we really have two things going for it with this company. The fact that, one, it's a commodity, and two, that it's a commodity that's in decently high demand. But if we back up a little bit, right, this is what had always thrown me off about CLF is the fact that it did seem to be a little bit of a stock where it was always going up. So never a great entry point presented itself. But we're on the 180-day chart. If we take a look at the RSI, it got this high back in January, pulled back from there. It got this high back in the end of March, pulled back from there. It got this high back in, the beginning of June and pulled back from there. So, taking a look at the RSI reading from here, it's at a similar level. That would lead me to believe it at least is going to pull back to maybe this mid-23 level in the near-term future. So for Pick a Tune in the YouTube chat, you've got a 1724 short strangle, meaning that you need to keep it between 17. I'm terrible at actually getting these lines where they need to be. 17 and 24, close enough. So you need the stock to finish here by August 27th. I would say maybe be in a position where you take profit on the put side of it and shift a little bit more capital, or not even shift more capital, but just in case it drops back down for what we see is presumed to maybe be a little bit of a drop in the upcoming week or two. Maybe closing out the put side for right now for profit would be a good way to do that. If RSI cools back off, we see it drop back down, enter back into the put side, you should see a little bit more premium on that, and that'll help offset any potential losses that you get from having the stock run hot up near the call. But you're in a position right now with the 1724 short strangle where I don't think you're running into anything too severe. I mean, this isn't like AMC where it's all of a sudden just going to shoot up to 41 days. So you're not, at least in my opinion, at risk of having some huge undefined loss as a result of upward price movement on this one. Let's take a look at the option premiums. Let's take a look at the 20. Let's look at the front week here. Yeah, premiums are dropping off. Prinsmeister did mention that in the Twitch chat. But one reason we like this stock I feel like I've said one reason we like this stock and then listed like 3 reasons that we liked it. But one of the other reasons that we like the stock was the great premiums on the cash secured put side, and 2, the awesome leverage that it provided us with, right? So normally you have a trade here. We could take the 23.5 strike puts, for example, that are expiring this upcoming Friday. These are going for about 30 cents a premium off 23.5 of collateral. That's a 1.25% return on risk as calculated by TD Ameritrade. Again, if we pull up our handy dandy, PC system calculator right here, we'll see that the 280 divided by the 23,000 max loss is what gets you the 1.25% return. But this 280 divided by the 3521 of collateral that your broker requires is an 8% return, which is a monster number for 1 week. And that is why we liked it so much, because there was a really attractive, margin maintenance requirement from the broker side. So that is another thing that I had going for it. But as of right now, this is another one that I have up on my HT watch list. And I guess since this is going live tomorrow, technically we could take a look through it right now. But CLF, we've got an entry point targeted at 21. Like we mentioned, steel company, nice margin requirement, need a decent pullback. We have that pullback targeted at 21, which is, it has a little ways to go to get back to that 21 level. But again, this is the advantage of keeping something like a watch list, right? So if you had this one stock that you were laser focused on and you're just waiting, you might get impatient and make a play up here and get kind of screwed if it drops back down to here. If we have a watch list where we have 10, 20, 30, 40 different stocks on it, we can be watching multiple things at once, and it gets a lot easier to be patient when every single week, right, you're going to have one or two of the 40-something stocks, and we're going to look to increase the size of this watch list moving forward. But when you have 40 stocks or 50 stocks, you're going to have one or two that are going to get down to that conservative entry price and present you with a really nice entry opportunity on a weekly basis. So that is the biggest advantage of having a watch list, in my opinion, because it helps you be patient with things like this, right? We could take a look at this and say, 21 looks like an attractive entry. We have 21 flagged in our watch list, and, we may never talk about this again. It may run off to 30, 40, 50, and it never touches 20 for the remainder of, the time that this stock trades in the market. Or, a month or two from now, we could be scrolling down our watch list and say, hey, it hit the price target. Let's revisit this. Let's get in, as opposed to having been in a trade for the past 2 months where we were losing money on it, leaking back down to 21. So, that kind of closes the loop on the discussion about CLF there. Not a great entry. For the purposes of the question that was asked, I think that short strangle is going to be just fine in the near term. But, anytime you have a position like a short strangle that has undefined risk, especially on the upside, because if it drops below your put strike, you could take assignment and manage the position from there. But when you have a naked call part of the naked strangle, that is where it gets a little bit tougher. So if it starts to run too high over here, just have some sort of mental stop loss in your mind to get out of that, and you'll suck up some more premium from the puts that you sold. It'll all work out okay, but just try to put yourself in a position where you're not going to get screwed if it really starts running up on you. And it's better to take a small loss to take a big loss off the table than it is to, be stubborn, really dig your heels in, and just continue to lose money on the same trade. But with that said, I think that's pretty much everything. FUTU, there we go. Last one, because we are coming up on an hour 30 in the stream. FUTU, quite frankly, I think this might be a pretty quick discussion. It's a China stock. There's so much regulatory risk with what's going on over there. Decent opportunity maybe to bottom fish. Jules, I love that Jules just tuned in on this from the YouTube chat, because she is the queen of Futu, maybe. F-U-T-U, Futu. Am I allowed to pronounce it like a word like that? We're going to roll with that. We're going to call it Futu. But Jules is saying Futu has a triple top, could take a dive down to 30. Tread with caution. Stop loss is a must. Yeah, I cannot reiterate that enough from what Jules just said. And I think the message disappeared from the screen. So we'll pull it up right here, right? Potential downside to 30, as Jules has outlined. And that's what we see, right? There's some serious support here at this. What did this line come in at? About $101 a share, and it's bounced off that multiple times. However, what gets a little bit scary is what happens if it drops below this level of support, and we don't really see any support until it gets back into the 35, the 40 to 50 range in here that it was trading at about 180 days ago. Let's back the chart up a little bit more to see what we can see. And that was pretty much it, right? It started trading. Maybe it does go a little bit further back than 1 year. There we go. A lot of support here at a much lower price level. For purposes of what we do, right, this is definitely a stock where you could find yourself in some hot water very quickly, because the downward potential can far outweigh anything we could do to a break-even price, right? When we look at our HG profit tracker, we could even take a look at something like Corsair. It's easy when there's limited potential downside in the future to keep just chipping away at this break-even price week after week after week. What we can't really do, though, is if we're have a cash secured put on a stock that's at 100 and it drops to 60, we're quite frankly, we're shit out of luck if something like that happens. So this is the kind of setup that we want to stay away from to completely continue to beat a dead horse. This is the setup that happened with Hyliion and is what really got us into a lot of hot water at the back end of last year when we entered right around here after a big run up and got crushed when it dropped way faster than we were able to drop our break-even price. We had another question from Picatoon. Do we trade options on futures? I do not currently do any futures trading. I think what I love so much about the strategy that we do is how hands on or hands off, but it primarily can be super, super hands off, right? We have this entire portfolio of trades set up for the upcoming week. How long did it take us to open these 3 trades? Probably less than a minute. So, as far as the upcoming week, we could not trade a single thing. And if Corsair kills earnings and this jumps up to 30, if Palantir finishes above 21, Zillow finishes above 95, SPX, we get this last bit of premium, and then things like ATOS finish with a profit. I mean, we could be in a position where we don't spend a single second at our computer trading, and we've made a $3,000, 2.23% return on our capital from literally doing nothing. So much of it is a little bit of research on the front end, and that's what we hope what we're providing right now can help you with. But there are so many option trading strategies out there that require you to, have your trade screen open, zoom in right here, have the active trader going. You got to buy, you got to sell, you got to enter, you got to exit. What we're doing is great because, I work a pretty busy full-time job. I know a lot of other people who follow along and are part of our community also work super busy full-time jobs. With this, you could do your research on the front end. You could be a member of our community where we're throwing ideas around all the time. You might say, hey, that looks good. I'm going to take 30 seconds to open this trade, and I'll check back in a week. You could go play golf during the day. I don't care what you do with your time during the day, but the point is, with what we're doing, there is a ton of free time, and that's what I love so much about it. But like I mentioned, it could be hands-off as well. As I zoom in, apologies, I cannot see the name of who just followed or subscribed, but I appreciate you, whoever you are, if you did that. But with that said, it can be hands-off like we just explained, or, hands-on where we had admittedly a little bit too much free time back during the week of July 19th, and we're in and out of all these different trades, scalping premium left and right. So that is, kind of the spiel on what we do in here. And, watch DOLE tomorrow. Are we pumping a stock in here, Holmes HC? Let's see. And, awesome. OLSKHUU. I don't know how to pronounce that in the Twitch chat, so I'm just going to spell it out to avoid being wrong about anything. But we are glad to have you here. Like I said, I work a super busy full-time job. It is well over 40 hours a week, and yet I still have plenty of time to trade because, we set up our trades up front. It takes very little time to enter into a trade like this and let everything just play itself out. And I need to undo this so our profit tracker is actually accurate. But, we could do very little and get a lot out of it. But we'll take a look at that Holmes HC in the Twitch chat. We'll take a look at DOLE. Let's take a peek. IPO'd on Friday, and, never a good idea to have the 1-year chart open on an IPO because you're going to get an enormous fat candle. So there we go. Looks like it opened at 15.4 down to 14.5 and rebounded a bit after hours. I'm not really... I have no idea what this company is or what they do. Let's see if TD can answer that for us. Healthcare company, looks like. But in general, healthcare, unless we're bottom fishing like we are with ATOS, and shout out to Really Is God. All right, we've got God himself following us on the Twitch. I love it. But, we've got DOLE, healthcare. I'm not a huge fan of healthcare stocks with our strategy just because, like we mentioned, it's actually the produce company that sells the fruits, and that is crazy. I don't know why they have this in here as a healthcare company, but, I think it's hilarious that they just IPO'd because that's something you're so familiar with seeing at the supermarket when you're buying fruits and, whatever, and pineapple, like you said, pineapples and bananas. But, with IPOs, and one other strategy that we like to lean on a little bit that I'll talk about quickly is options, like when option chains start selling post-IPO, right? You could take a look at Robinhood. They IPO'd last week. It doesn't have options yet. You could take a look at Dole. They IPO'd on Friday. They don't have options yet. And I guess now I have heard that a pineapple a day keeps the doctors away. I could have sworn it was apples, but who am I to disagree with the viewers? But private company for over 100 years, 98-year-old billionaire sold it. They do a lot of their stuff out of Hawaii. I think they get a ton of their pineapple from there. That's me just spitballing. I don't know if that's actually true, but I seem to recall they've got a ton of real estate and a ton of hold over in that area. But with that said, getting back on track here, after an IPO, usually within a week, maybe 3, 4, 5 days of IPO, you're going to start to see options. And when you see options, there is a little bit of uncertainty post-IPO about what's going to be going on with price action. And that is awesome for us because these new options typically carry a ton of inflated premium. So one thing that we like to keep an eye on as part of our research and part of the strategies that we run are stocks that are about to have new option listings. So that's data that we try to aggregate and then, throw around in the chat every now and then when we see it. But if Dole has options come out next week, or if I don't really want to play Robinhood because it seems a little bit elevated, a little bit risky, but something like Dole, if they have options come out next week and they have puts that are trading for insane premiums, that's something you could really easily take advantage of, because a lot of the times I've seen it so often where you start selling options on something post IPO and within a day or two, those options that you've sold have lost half their value because the stock hasn't done anything. So that's a great area of opportunity. I love it when we do talk about the IPOs, so appreciate throwing that in the chat. So we were able to take a peek at this one. Again, we could throw it on the watch list and keep an eye on when they plan on having their options listed. Low float, mentioned $30 million float. I love the background information, Holmes HC. Keep it coming. I love the context on the stock callouts. But yeah, that'll be something that we want to keep in mind. The fact that we've got a couple prominent IPOs in the market. Those options are probably going to be coming soon. So we'll just. I feel like I sound like a broken record. I've said keep an eye on it like 10 times here. You guys have to check me on this. But when that comes, we'll definitely do our best to alert it if we see it, and make that evaluation of whether or not the amount of premium that we could get is a decent trade-off. But with that said, we're almost at an hour and a half in the stream. It is Sunday night. There's only so much that we could plan for up front on as far as heading into the market. I think what we outlined with what we did, where we put our money where our mouth is, where we entered into PLTR, Zillow, ATOS. I think those are all awesome entry opportunities if you're looking at something to get into Monday morning. But as we say at the end of every single stream, right, it's so hard to just walk into the market Monday morning with a laundry list of what you want to do, because 15, 30 minutes, an hour into the day, something crazy can happen, and you're not going to be able to stick to the original plan that you have. So that's why, as we mention every week, having our community, our chat room, where we can throw live ideas around, people alert each other to different things that are going on, finding different entry opportunities as they present themselves in the market as the week passes is so important. And that's probably what we're going to be doing, right? We've got a pretty short list of plays that we have open. We've got a lot of money on the sidelines, so we are chomping at the bit to start deploying some of that cash and keeping an eye on the market for those opportunities when we see them. And Todd Miller in the YouTube chat wants us to take a look at ASPS. We're going to take a look at ASPS. We got another one. Okay, ASPS and SAVA. We're going to take a look at those from Todd in the YouTube chat. We're going to take a look at SAVA from Red Angel in the Twitch chat. To answer OLSKHUU, Olsku? Is that? I don't know. I might just pronounce it as a word now. We stream every Sunday night at 9 p.m. Same time every single week, unless something is going on in my personal life, which we've been able to stick to the schedule pretty consistently. So appreciate you guys who are new to the stream tonight. It's always more fun when we have more people watching along, more fun when we got more ideas in the chat, and more conversation going back and forth, because I love for it to be as interactive as possible. But we'll take a look at ASPS really quickly. The idea there is that the moratorium on mortgages is ending, so foreclosures should go up. To talk a little bit about that idea, very anecdotal evidence here, but in some discussion I heard from someone who is decently high up at a credit union, they're not expecting increased foreclosures beyond the traditional rate of foreclosures. So even though that moratorium is ending and people may expect that to go up, I would just keep in the back of your mind that maybe it's not a concrete result. Maybe not a foregone cause and effect with that moratorium ending and foreclosures going through the roof. But again, I'm just some idiot who heard someone say something, so I have zero numbers, facts, figures to back that up, but just potential counterpoint to keep in mind. But with that said, let's keep taking a look at it. ASPS. Let's see. Real estate, Altasaurus. Okay. And fun fact, I used to do some work for this company, so this is one I'm decently familiar with. If we pop it back out to the 3-year, it has, was not the most well-run company that I've ever seen in my life, which is why you could see, I shouldn't say company, but it's a real estate portfolio. But I don't know if Todd was thinking about playing this one up or down, potentially down with the theorized increase in foreclosures, but from personal experience, I don't think this is the greatest real estate fund out there. Not really incredibly run. We've seen a decent run up here. If foreclosures do increase, we could see it cool back off a little bit. What are we seeing from an options perspective? Really not a ton of liquidity, right? The spreads look decently tight though, so you could maybe pull off a little something. I don't know what you would, if you wanted to play it back down with a credit spread, that might be something decent. You can get 20 cents on a 250 wide spread here to, a 10% return, but really, I don't know, especially on a spread, if a 10% return is in the wheelhouse of what we're trying to go for, just really not a ton of flexibility between strikes, between expiries, and, with volume. Premium doesn't look insane. So that might be one, unless you want to go out to September maybe, where there's even less liquidity. ASPS, I would maybe just leave it alone. If you wanted to play it down just via short stock, right? It's not hard to borrow or anything. It'd be really easy to just sell stock and then, maybe create some sort of stop loss on it. Where would I put a stop loss? I would stick a stop loss right at about $9.80-ish. The reason being is because it looks like there's some sort of resistance in this 960 level. And sometimes, like you could see with these tiny little candle wicks, it gets just past the top of the resistance, and that would be enough to stop you out of your position. So we like to go a little bit beyond that. So 985-ish, 990 if you wanted to short those shares with that kind of stop loss. I think that would be a decent play to get this thing back down, because I think in the near future, definitely a ton of downside potential. If you look at that 3-year trend, it is really nothing too positive when you zoom out and take a look at that. And then our very last stream of the night, SAVA, is what we're going to want to take a look at. What's SAVA? Oh my goodness, this is horrifying. Look at this chart. It went from 76 cents, and this was back in, 2018, 2019, to candles that are, half the size of my screen here. But we're starting pretty wide. This is a 3-year chart. Let's zoom it in a little bit to the maybe 1 year. Okay, and in 1 year, it's still gone from, oh my goodness, $2.78, $3 to upwards of 140. And when we see setups like this, so often we say, be careful. These things could fall just as quickly as they rise. That's exactly what happened right here when you see these two red candles, as it went from, oh my goodness, $146.16 at the peak down to $70 a share. And we'll zoom in a little further to see how quickly that happened. Looks like that happened in the matter of 2 days. So, this isn't normal. Something happened. Let's pop over the live news. And it says Cassava. I hope that's pronounced well as well. If I'm just totally butchering pronunciations tonight, feel free to let me know. But we're going to rock with that pronunciation. Cassava Sciences shares are trading lower amid investor and analyst reaction to the company's recent biomarker data from an open label study of I'm having trouble pronouncing stuff when they're throwing words like this at me. But an Alzheimer's drug. So obviously didn't look like good news. They had a buy target reiterated with a price target of 124. But again, this is one of those where you look at this crazy price action. If you want to do something like buy shares and hope it shoots back up, I think that's fair game. But if you're following the strategy that we run and we stick to pretty tightly, where you're selling cash secured puts, taking advantage of option premium, oh my, there is some option premium very far out of the money. Okay, you got in at 340. Okay, well, you've got nothing to worry. You might be rich at this point if you got in at 340 on this stock. Like we mentioned with stop losses, I mean, obviously, you probably had a lot more 2 days ago than you did today, but objectively, you're in a great place. You've made a ton of money overall in the trade, regardless of what happens. Uh, Maybe covered calls would be awesome for you if you've got shares. If you have any multiple of 100 shares, you're going to be able to sell covered calls, right? So let's say you have 100 shares. I'm just spitballing. This is all purely theoretical, but if you have 100 shares, you could sell a 100 strike covered call that expires August 20th and basically get a free $320. And then the downside, quote unquote, is that you'll have to dump your shares for $100 if it runs back up there. But, I think you'd be perfectly happy to gain $30 a share between now and August 20th. So really, it's a win-win in my mind when you sell covered calls. Okay, he's saying he's not rich. He's backing off it a little bit, but objectively, never a bad trade when you're popping in on something at 340 that was flirting with double digits. So really nice there. If you were looking to enter, which doesn't look like you are, you have a position. And it sounds like you're trying to manage. Let me take a look real quick at the downside selfishly here. It looks like 37, 33 might be decent support here. So what is interesting is, it still has a long way to go to get down to this, sub 40 level. However, when you look sub 40, there's still some decent premium on the options, right? You could sell 10 of these it would be a large position if assigned, but as we've mentioned before, your broker gives you a little bit of leverage. And all of a sudden, you're going from what would be a 2.13% return on a 30 strike put to doing something where you're pulling $600 off 8,700 in collateral, which is a set 6.8% return as long as it stays above 30. And where do we see 30 on this chart? It's down here. 30 is a price that has not been touched since February. And while they did have a pretty sharp drop off, and that's not to say this couldn't continue, but you'd have to imagine it at least levels out over the next 3 weeks to where 30 is decently safe. So if you're looking at entering into this, that's kind of admittedly an interesting entry. But what scares me about this, we can compare this to something like CERE, where we made a trade like this, or ALEC, where we sold a 20 strike. There was some precedent for it trading at 20 beforehand, right? With CERE, there was some precedent for it trading at least in the 10-ish range beforehand when we sold 15 strike puts. The issue that I'm seeing right now with SAVA is, if you got assigned at 30, a year ago, this thing was at $2. So if all the work that they had been doing that had this price shoot up this far, kind of comes unraveling, it seems like this might be the beginning of that if all the drugs that they've been working on are deemed ineffective. And how likely or unlikely that is, I legitimately can't speak to because I haven't known a ton about this company beyond what we've just looked into tonight on the newswire right here. It looks like some Alzheimer's scientists are critiquing their study results, saying it's overblown, inappropriate, and uninterpretable. That is, the type of uncertainty I don't like to deal with. So for the context of our strategy, I would stay away. If you have a position, maybe setting up a stop loss at this 60 level, right? Because we see it peak here. I think that should act as decent support. Maybe high 50s for a stop loss is a good way to manage those shares. That way, if it keeps dropping and breaks below that support, you're out for a profit. You're locking those gains in because you haven't made a single dollar on a trade, right? Until you get rid of it, quite frankly. But that way, if you've got a stop loss here and it bounces back up to 100, you get all those gains while still limiting your downside risk a little bit. So if you've got shares and you don't want to do covered calls, I think stop loss is the way to go. If you don't have a position in this period, I don't think what we do with our option selling strategies is going to be a great way to initiate that position. So, that's the spiel on SAVA. And now that we're over the 1 hour and 30-minute mark on the stream tonight, I am going to wrap it up. One more quick final plug, right? All of our trade alerts live as we make them are in our Discord server. And starting tomorrow, those are going to be part of our HT Premium package, which you can get to on our website by going to the HT Premium tab right here, clicking on literally any of these, and it'll take you to where you need to go to sign in and subscribe. Every package we offer is less than $1 a day. If you have any questions on anything, let me know. But again, that comes with live trade alerts, comes with trade plans like this that we published today for some of what we've opened up. If this will hurry up and load for me. Yeah, so every single trade that we enter and that gets alerted, you're going to see right here on the trade plan. So you're going to have something that looks like this for every single trade that we enter to have some information to back up the trades that we alert. Beyond that, you're going to get access to our premium chat room, our live portfolio tracker that we see right here, and you're going to be able to download that and use it for yourself with your own data so you could track your trades using our strategies. And then we are also going to have option scanners that you could pull in here, right? So when we scan and we run into our option scanner, have all of these things predetermined in here. We have links in there that you could run to and click them, and all of a sudden this is going to be populated. You could run the exact same scans that we run, sorted by return on risk, which isolates the best returning options in the market on a weekly basis. You'll have access to that, and you'll have access to our watch list, which right here, complete with every single stock we have our eye on, price targets and notes on every single one. So that is what we've got for our HT Premium package. That is our little self promo that we are running at the end of the night. So sign up for that. Thank you so much to all of you who are tuning in tonight. Really is God. We've got Olskhuu, Olskhuu, Holmes HC. Appreciate you guys tuning in. And again, all of our premium stuff is going to be in addition to what we already do. So things like our live streams that we've had tonight, our YouTube videos, our main chat room channels, discussing these trade ideas with everyone. That is all still going to be there. The idea behind this HT Premium package is just things in addition to what we already do. So thanks again to everyone who's tuned in tonight. It was awesome having that type of activity in the chat. And we're going to look to be doing the same thing, same time next Sunday, 9 p.m. So to end off this stream, we are going to close it the same corny way we do every week and at the end of all of our videos, saying thank you for watching. This has been the Hourglass Trader, where as time passes, we make money. Thank you guys, and hopefully we'll see you all next week after a